Welcome to the FML podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shamir Sajdeh, and some of fintech's hardest hitting marketers and leaders.
Welcome everyone to today's episode of the FML podcast. Today we're joined by Sam Knott, VP Acquisition Growth at Marshmallow. Sam, thank you very much for joining us.
Yeah, no problem. Thanks for having me. Looking forward to it.
Awesome. Let's just kind of jump straight into it. For everyone listening, could you just kind of give us a quick overview of your background and your journey so far?
Yeah, sure. So a long time ago, I did engineering at university. Always quite fascinated with products and how people interacted with them. I was a pretty terrible engineer, to be honest, but I realized that how people interacted with them is the bit that I enjoyed. I just didn't know that was marketing. So I then sort of embarked on a marketing career, and I did about 10 years at Dyson, a number of roles. I was in the US for a bit, I was in Japan for a bit, sort of helping deliver huge amounts of growth or rebuilding countries that weren't quite growing as fast as they were before. And then the second half of that career was really pivoting into more digital marketing and then more into e-com and building a D2C business. And then just about 2 years ago now, made the decision to move to Marshmallow. So I joined 18 months ago and it's been pretty fantastic. So a bit of a change, going from a big organization to a startup. Some surprising similarities and some not so surprising, I think. But it's been a pretty fantastic 18 months so far.
I've already got a whole bunch of questions just from your intro, but before we get stuck into that, could you kind of give us a quick overview of kind of like who Marshmallow are, what they do,
Sure.
and maybe kind of like a 60-second sort of elevator pitch as such?
Yeah, sure. So depending on who you are, we're a fintech company, but what does that really mean, right? So how I would describe it is that we're really, really good at giving our insurance product to people that the industry doesn't really care about. And there are two things they do there, really. Either they just don't even return a price and they're just not interested, or the price they do return is so expensive, it's prohibitive, and means that people are either a barrier to getting insurance, which in this country is huge because, you need to drive to work, you need to drive to drop off your kids and pick up your kids. So the segment that we've been really championing for a while and will continue to champion is migrants or expats. Basically anyone that's not born in the UK. We're really, really good at giving them a brilliant and competitive product. And conversely, the market doesn't really seem to care about them. So I'm pretty passionate about making sure we can help fix that and solve those problems. And, migration is such a huge part of economic growth in this country, and something that's only continue to grow. So I'm pretty passionate about supporting that in whatever way we can through car insurance currently.
One of my first questions, and I definitely want to lead into talking about how you're reaching migrants in the UK and your approach for Marshmallow. But I kind of want to take a step back and kind of kick off with your journey at Dyson. There's kind of two things that really interested me in the intro. One was you said about similarities and differences from a large corporation versus a scale up. And the second bit was about fixing underperforming countries. And I've got loads of questions there, but let's start off with the easy one first. What do you think the key similarities and differences have been for you?
I think pretty much every large business likes to think that they're fast growing and entrepreneurial, right? And you never really know how true that is. And I was a bit nervous about that when I was leaving because Dyson was unbelievably rapid growth. Like I used to joke that the smallest growth target I ever got was 40% year over year. And we're talking big numbers, big bases. So that pace of change and that rate of change and rate of growth was something I was prepared for, and has been less of a surprise since joining Marshmallow, actually. So actually that helped quite a lot. Dyson sort of, stands out really in sort of consumer electronics, or whichever way you want to define it, that it is rapidly growing versus everyone else that's, in retail, single digit or declining, especially in the UK. I think in terms of like the e-commerce experience, so one of the big things that I was working on, we were able to grow sort of our D2C share from being about 5-6%, and 3-4 years later it was 25%. And then in my last role, when I managed the UK business, we were 40% direct. So that rapid growth, direct e-commerce, understanding the consumer journey, being able to measure it, being able to optimize it quickly was all quite similar. In terms of differences, my last 2 years at Dyson, was a combination of a drought causing a semiconductor issue in Taiwan and making all electronic products being an absolute nightmare. And everyone saw that in terms of the car industry. Then Brexit, which obviously had its own supply chain issues. Then COVID. And then at some point, and I can't remember the order, someone decided to park a boat in the Suez Canal as well, which didn't help. So sort of understanding all these supply chain issues, it was hard. And then now I've moved to a fintech business where not having physical product is quite exciting and quite rewarding. And I'm not sure I'll go back to physical product again, to be honest. But I think the differences would be the engineers that I'd worked with before really closely were obviously physical engineers. We had software as well at Dyson, but really getting to understand the nuances of what we need to do front end and back end and how we balance that engineering resource across the overall business. And I think probably with Dyson, we had such a focus on quality and we held everything back until it was absolutely beautiful and perfect and best in class. And obviously that's not how the tech industry and the startup industry works. So getting more comfortable with launching things at MVP and iterating was probably a bit of an adjustment.
I was going to say, it has been a weird few years, really, hasn't it? A lot of odd stuff going on. I've been watching The Last of Us recently, and I think it might have spooked me a little bit. So I was going to say, I think do you think your experience in that growth in D2C for Dyson is one of the reasons why you were kind of effectively the right hire for Marshmallow, in the sense of, I know insurance is very, very there are obviously there are a lot of affiliates and brokers and stuff in place, but obviously you take Direct Line, for example, they've positioned the entire business to go D2C. Is that kind of the intention with Marshmallow and kind of like the reason for your appointment?
I think that's probably a happy coincidence. I think I'll probably answer this a little bit indirectly. I always think in my mind, there are two types of brilliant VP marketing or CMOs. I think you've got brilliant creative geniuses that know how to do the proposition, know how to bring it to life with really captivating campaigns on one extreme end. And on the other extreme end, I think you've got almost D2C focused ones that know how to pull the funnel, that know how to build websites and do the e-commerce equation. I'm definitely more that side. And it makes me feel quite old, but even 7-8 years ago when I was in the US, we were only starting to do social advertising then, right? So I think in 2017 was the year in the US where we went from spending 20% of our money on digital marketing when I joined there. And then when we left, it was 80%, completely flipped. And we were still spending the same amount of money on TV, a lot of money, but we'd upped our digital so much. So I think going right back to being an engineer, I've loved that digital piece because I love being able to see and pull at threads and work out where to optimize it and measure it. I think marketing has gone through a bit of a journey on that. I think on a bad day, marketing is very opaque and people are skeptical of it. But I think these days there's very limited excuses now. I think it should be so measurable. So how to answer your question, I think being someone that knows that marketing is just a lever on how you deliver growth. I think when I spoke to the founders, they'd realized they'd done a lot of growth so far through price comparison websites, but there are only so many of them. So how do we get to the next level of growth? And how do we understand who our target market is? How do we get them to grow in other channels? How do we maybe get them to grow direct? And initially, people were pretty skeptical that we could grow a direct business, to be honest. The data says that 90% of people go through price comparison sites and they do about 2 or 3. And with the cost of living crisis, that number's only going up as people want to shop around. But we have been able to grow a pretty massive direct business quite quickly. When I started, we were about 5% of our policies direct. This week, we're 28%. And then we're on fintech growth trajectories. So it's growth on growth. We 10x the direct business in the first 6 months, and we'll probably 4 or 5x it in the next 12 months. In terms of size.
Amazing. I think one of the other things that you mentioned and said was you went in and you fixed underperforming countries. That's really, really interesting to me. We do a lot of launches into new territories and global campaigns for our clients. I'd love for you to just kind of talk me through that. What did that mean going into a country and fix it? And then perhaps what was your approach to fixing an underperforming territory? Do you have Sam's playbook that you run through to make it happen and make the magic happen?
Well, first thing is it was definitely not just me. There were lots of us. So in the US, about 5 or 6 of us all joined within about 12 months period across the marketing team and a few other teams. And some of my fondest times of my career, actually, because I became really, really close friends with those people and still are now, because you're all sort of thrown in to solve these problems together. And I guess what we were doing in the US is similar to what kind of seeing in the tech startup world now, that we had seen a business in the US that had grown a lot of top line growth, a lot of sales, and opened up a lot of new retail channels. But at some point you run out of retail channels and there's nowhere to comp it year after year. So then you go, well, hang on a minute. Those 50, 60, 80% growth years, because you've gone from 2 channels to 3 to 4 to 10, now don't really make sense anymore. And actually, in the US example, what we'd realized they'd gone too far. So we'd opened up to too many channels and they weren't merchandising or selling the product into the high level of quality that we would expect. And when you're selling a really premium product that's, twice the price of the market leader and 10 times the average, how that is presented is fundamentally important to make sure that people realize the value equation. So really there is what I call go-to-market planning. So, and at Dyson, marketing was a really big part of that, but it's really about looking at your channels and where you're going to distribute it, and how you're going to present the product. So as I said earlier, there was a big marketing play there, and actually we really wanted to pivot to fewer channels and more digital channels. And we really wanted to grow our own direct business. So that meant our marketing mix moved to more direct. And it meant that we were happy to reward the partners that created brilliant shop-in-shops and put us on their home pages and did brilliant shop-in-shops in their flagship stores, and spent less time working with the partners that only wanted to sell it on Black Friday and do the easy thing and do the cheap thing, which was great for top-line growth, but not sustainable. And actually what you just find is that the customer just waits for that promotion period, and you just end up a bit of a race to the bottom. And that plays perfectly into your competition's hands, right? So it's not really just a marketing job. It's what I call go-to-market. You've got to pull that whole channel strategy together, really. But it was a lot of fun.
And I think this sort of, makes a nice segue into talking about Marshmallow and thinking about your 18 months here so far. What is that go-to-market piece? What has that looked like over the last 18 months? What big decisions and what sort of key levers have you pulled while you've been at the helm?
There is a bit of a playbook, I think, that it's not my playbook. It's it's a playbook that's out there. But I think again it was a similar thing, that we had seen a lot of growth in the early stages, and we were able to open up channels. And at some point, you run out of channels, so you need to think what's the more medium term and long term way to do that. So we had to be really focused on who our target market was, because it's really hard to compete with the massive companies in insurance. You can't compete with them in terms of their credibility, their heritage, their brand awareness, their marketing budgets. And they can't compete with Go Compares and Compare the Market's marketing budgets. So there's a lot of money being spent in that category. We made a decision that we were founded because we were brilliant at giving people that weren't born here car insurance. And we're really, really good at it. So now let's just be really, really good at that and be the go-to place for that segment. And probably about a year ago, we decided to sort of double down on that. And then once we've decided that we can do that, then we realized that actually there's a good opportunity there to provide a great direct proposition for those people. And when you can bring more customers direct, then your unit economics improve massively. And we're learning more and more about our customers every day, so we can return savings back to those customers. And now we're in a place now where since 10 months ago or 12 months ago, we've 10x'd our profitability on a per unit basis. So from a business that was growing rapidly top line to now a business that's still growing very quickly top line, you're seeing that drop through in where we are now with a lot of VC-backed businesses and D2C-backed businesses where those unit economics don't make sense. I'm really proud that ours not only make sense, they are really strong, and we're only just starting to get stuck into it.
I think there's one big learning there, which I think what warrants a minute or two to talk about is the fact that you've narrowed down a specific audience. There's a lot of brands out there that are trying to obviously be all things to all men, and I think for an insurance company to go, hey, look, we're just going to focus on migrants and expats. I'm assuming, and correct me if I'm wrong, that's not the long-term plan for Marshmallow. You're not going to be doing that in 10 years' time. But I think, am I right in saying that in order to penetrate the market and to drive growth, that's going to be your focus until you start to feel it reach some sort of saturation?
There's two ways to go, really. I think our mission will always be that we will represent the people that other people don't want to. So I always talk about the double underdog. We're an underdog in this category versus the big companies, but we're also our customers are underdogs as well. So we're going to be the underdog supporting the underdogs. Now, right now, we've got a huge amount of opportunity and growth. We barely even started in terms of migrants and expats, but it's pretty logical and obvious to see that, okay, well, those people struggle because maybe they don't have credit ratings and maybe they don't have, the banking history of a UK-born person. They have a lot of things in common with, students who haven't got a credit history. They have a lot of things in common with people who have got bad credit, either fairly or not fairly. So all of a sudden you start to see that if you sort of bucket the underrepresented and the under-championed and the almost sort of disadvantaged by the big market, that would definitely always be the group that we'll want to go after. And I think that's a very inspiring mission for me.
I think this is where kind of the categorization of Marshmallow Marshmallow as a fintech kind of comes into play, which is there's a lot more tools available for firms like Marshmallow now to make those decisions. Things like open banking and
right.
Credit tools and whatnot, which can be leveraged in order to make those decisions, because having bad credit doesn't make you a bad driver, right? So
no, exactly. And there's a really good example to bring that to life. I've been on the other side. So I was in America for 5 years. I was in Japan for a year. And I learned this when I got to America and tried to get, cable TV. And I had to pay a £500 deposit, which wasn't a deposit because I was never getting it back. But that was because I didn't have a social security number history.
Yeah.
And you think, well, hang on a minute. By every other metric, I've got a really strong credit rating. I've never missed a payment on rent, all these sorts of things. So we see that with our customers, that we get people that come over, say from South Africa, and they've been driving for 10, 15 years, never claimed, and are really, really safe, are unbelievably good insurer. And they move here, and it can be as simple as when you go to type in your insurance details, that box that says how many years have you been driving the UK with no claims, you click no, 0. The algorithm now treats you like an 18-year-old student, which, I crashed 1 or 2 cars when I was 18, did pretty risky, but someone who's been driving for 20 years and never crashed, it's a completely different profile. But the blinkers are on in the industry that they don't, it's sort of, in one aspect, they are, completely identical, but the way that the industry treats them, they think they're completely different risk profiles, and we don't think that's right.
I think, that overall thinking is quite prevalent across sort of traditional financial services, isn't it?
I agree.
It's very, very much, a computer says no, and if it falls out of that, if it falls out of what should be the norm, then you're in all sorts of trouble. Silicon Valley Bank has obviously had a lot of bad press recently, but the whole reason that they were kind of founded and about was to help firms that were startups and, for example, who had exposure to platforms or asset classes like crypto, to open an account, because without them, there was no way that we were going to be able to get any form of facilities as a traditional bank. And to a certain degree, it kind of facilitated, a growth for, an entire sector. And I think Marshmallow is kind of contributing, as you said, kind of right at the beginning of the podcast, to obviously the migrant piece and the expat piece, which is, as the UK has been a melting pot for years, right?
Yeah. And there's a few factors. I just think everything's more fluid now. The old model in terms of having a home ownership, not changing address as much, not changing job as much, maybe being married, maybe having children, all of those risk profiles just aren't really that relevant anymore. People are moving jobs, addresses, doing different jobs, doing self-employed jobs, doing multiple jobs. They're moving countries, immigration, migration, all of these things. You can see how you just stack those things up, that it's the same. You're completely right. It's the same with banking, same with credit, same with loans, same with all sorts of things. It's just not representative of how people are living now, I don't think.
Yeah. God forbid you're a freelancer who's traveling. You're
right.
all sorts of problems. So let's talk a little bit about. You kind of mentioned your sort of direct has kind of gone from, I think it was 5% to 28% at Marshmallow. I'm really, really interested to hear about your marketing mix. Kind of what were you doing before and what did that look like versus kind of what are you doing now? And then I suppose, what was the data points that led you towards those decisions? I'd really like to hear about that journey.
It was definitely, we made some big mistakes, so I'm happy to share those. I think the starting point for me was, let's just start a little bit of paid search and see what happens, and see how much demand there is out there at all. So we started that. I mean, marketing is brand new at Marshmallow. When I joined, I think we'd spent less than £10,000 in total in marketing. We hadn't done any marketing at all. We had 2 people in the team, copywriter and designer. We really weren't. When I was told when I joined, we don't really do marketing, I thought, okay, sure. And then when I got there, I realized, okay, yeah, no, we really haven't done any marketing, which was even more exciting. So we started with PPC and some paid search stuff just to see. We knew that we wouldn't be able to bid on car insurance, or cheap car insurance is the term, because that's, GoCo have to pay for that opera singer and they need those clicks to go into their journey. So it's £300 to buy those clicks. So that's where we sort of started realizing where this expat migrant audience for us was interesting, because on those terms, there was a lot of interest for us and we were ranking quite highly. So we started there and we realized we could scale that quite quickly. In the last sort of 6 months or so, we've realized we're tapping out in terms of brand search. So we're having to expand that more and more and more. And we're using audience lists and retargeting and things within that. So we added to the mix paid social about 6 months ago, and that's started to really help as well. So I'd say we're about 6% share. We add the paid search, we got to about 10, 15%, 20%. And now we've got paid search and paid social sort of funding each other. We're at 25, 30% some weeks. What we're now realizing is that we can probably keep doubling and, growing 70, 80% of that as a mix year over year. But I'm not that excited by that number, to be honest. I think we really want to go a lot faster than that. And in order to do that, we really need to smash through that sort of branded search. Is such a good proxy for us and our customer awareness. So we are currently having conversations now about how to go really, really deep with our audience and start building out other channels. We're already adding in sort of affiliates and display and some of the more obvious sort of performance channels. When we've done this once before, so going back to the mistake, we did an above the line campaign exactly a year ago. We did some localized. We did 5 cities in the UK. We did some out of home with some TV. We did digital with it, and it was a really successful campaign in terms of driving more clicks and driving more quotes. But that was when we thought that going into the main market was the right thing to do, and we just realized that we weren't able to offer price competitiveness that we needed to sustainably. And actually, the bigger companies are better at it than us, being really frank. So you just think when you show up in first, second or third in that aggregator list, you have to be significantly cheaper than the brand you'd heard of. Because I think that people, generally speaking, click on the cheapest brand that they've heard of. Obviously, it varies.
I would absolutely concur with that. If there's a brand I haven't heard of in the number one spot, I'll go to the number 2 spot, even if it's 50 quid more. That'd be a curious test, wouldn't it? What's the differential between first and between 2 spots?
We do that every day. I could talk about that. It's a whole different podcast.
Yeah. Oh, really?
Yeah. It's a very niche style podcast, so I'll save you that. But yeah, if you end up being cheapest, 2 things happen. You either become an anchor for the person in second, like you said, or actually, do you really want all of your customers to be the people that just choose the very cheapest? From an insurance fraud risk, probably not. So we realized that we can't do a good enough job in growing that brand awareness with that big UK-born audience and price competitiveness. So it forced us to realize to go back to a narrow audience, and we've almost gone full circle now. Now we're really clear on our audience. Now I think we can probably revisit thinking about how do we start to smash through that awareness. And I'm not really sure where that's going to go yet, but it might mean that we don't even advertise here. We might be advertising in the country before they've moved to the UK. So we've got lots of work to do to work that out right now, to be honest.
Very interesting. That's some sort of predictive modelling, isn't it? I remember I had contact with an FX company, and their biggest white label partner was a haulage firm. And the reason was that all the people that were moving out of the UK, the haulage firm was just introing them to this FX agency. And in the end, they just set it up as a white label, which was basically two guys on the desk that sat in the room with everybody else. But they were about 40% of this FX firm's business. Wow. Very, very well-known brand, by the way. Yeah. But it was just one of those that the business development guy saw the opportunity and he thought, well, that's a good idea. We could do that, and spun it up. And I think, thinking about that point of the other way around, what's that bit of when they come into the country that can you latch onto? That's very interesting.
Yeah, that's what I want to kind of help our audience with. When you move to a new country, you don't have a clue what no claims discount means. Mm-hmm. People really struggle to know how to get housing. People really struggle to know, they thought they wouldn't need to buy a car, and then they realise all of a sudden they did, and that's an unexpected expense. And then they don't realise they have to do tax and insurance. There's another one. So we want to really help people understand the things you need to be aware of and top tips when you move to to any country, but for right now, when you move to the UK. And then if we can help them, give them a competitive car insurance product, then great. And then, at some point in the coming years, maybe it'll be more than just car insurance.
I think we've kind of touched upon this at a few points, and I think I know the answer, and it's pretty obvious, but I'll ask it anyway. How important is data and analytics to Marshmallow and as part of your marketing?
Yeah, you do know the answer. Insurtech and insurance is such a gift for a marketer, because everyone's probably gone through a price comparison, right? And you think about all of the data points you put in there. Imagine how much marketing you have to do to get, date of birth, occupations, open banking, all of this unbelievable demographic data. And what that allows you to then do is really tailor your product and accordingly. The most important and smartest people in our business are the pricing engineers and the pricing team that are making sure that we can find that balance between finding a competitive price for our customers and giving them great value, but also making sure that we don't take too much risk in terms of, maybe underwriting risk and fraudulent risk, and making sure they're still profitable for us. So that's where all of that data really works for driving the overall business. For me, I can use that data in multiple ways as well, because when someone then goes through our sign-up flow and purchases, we then know propensity of people that trade up. We know propensity of people that start quotes and don't buy quotes. We've got such a full funnel of data, and then we can, when we look at our retargeting pools and when we look at our acquisition pools, we can build lookalike audiences based on those people when we've got the best price, and we can be really specific and target. So we know, for example, we're really, really competitive for people who've just moved here in the UK, been here a year or two. So that's why I'm saying maybe us advertising before they get to the UK and helping them up the funnel almost. So yeah, I'm always a big fan of data, and we almost have too much here sometimes that every day you realise there's another opportunity to use it, which is quite exciting.
I suppose that presents a question. Do you think a marketer can have too much data?
So we did our tribe that I lead. We did our Q1 reflection session yesterday, which was great. And all parts of the team sort of shared their wins, their fails, their learnings, and then rest in pieces and a few beers. And someone asked me a question in the Q&A: what's the biggest risk for the rest of the year? And for me, it's that we try and do too much. And we've learned that with our go-to-market proposition and being on the Audience Unlimited. But because we have so much data, and we now have so many products and so many channels, and because we're so early in our journey, so much of it is suboptimal. So you can easily, quite quickly build an H2 plan and go, we need to fix this, we need to fix this, we need to launch this, we need to solve this. So you probably can't have too much data in terms of being realistic about how you work with the resource that we've got, the tech resource we've got, and really find the sweet spot in terms of effort and reward. So yeah, I think it probably is a result of maybe having too much data, yeah.
I think the other thing that you said there is that brings about doing too much, which ends up becoming lots of stuff that's suboptimal. And I think every business and every brand goes through that. I know that, when I've been client side and even with running the agency, I had this conversation with my marketing manager last week. I sort of said, I think we're spreading ourselves too thinly, right? I think we need to ruthlessly chop anything that we're unsure about and then just create a focus. And I think sometimes you can kind of get not carried away, but maybe caught up in the momentum. And then when you look back, you think, well, actually, we're doing, probably 70% of the quality across like a whole bunch of things. let's just narrow this down, tighten it up, and then we can kind of go back at these things a little bit later. And that's always beneficial as well.
It's tough though, isn't it? Almost turning down opportunities, especially when you can see what it's going to deliver. It's hard.
Yeah, I mean, look, you know, I've been speaking for 40, 45 minutes now, and I've thought about 7 things that I'd probably be testing. I'll tell you about them afterwards.
That's the good thing about the data, though, that you can we abandon a test that day if it doesn't work. And it's no one's fault. There's no blame. The culture here is so receptive to testing. So we always try things, and if it doesn't work, you just stop it tomorrow and then move on to the next thing. It's not like when I started my career and you're buying massive TV campaigns and the upfronts in New York, and you've got 18 months locked in. It's pretty terrifying these days. It's very different.
Let's talk about that culture piece. I think, like you said, you've got a culture that helps and almost like nurtures that kind of like testing environment and that no blame environment. How important do you think that has been to Marshmallow's growth?
Fundamental. I think it's the reason why I joined. I met so we have 3 co-founders. We have 2 of which are co-CEOs that just happen to be twins. Not a coincidence. And meeting both of them, just realizing how low ego they were and how direct and happy to admit what they know and what they don't know. That is such an impressive trait in anyone, let alone, an entrepreneur and a founder. And what I realized is when I was in the interview process and I was interviewing with people of all levels, I said to them, either you've got them unbelievably well trained, the paid actors, or it's a cult, or this is just, a great place to be, because everyone was demonstrating those traits. That was my number one thing that I wanted to, cultural fit was my number one non-negotiable in my next role. And, it's been 18 months in now, and I still see that every day, that when we get things wrong, people don't go into who did it and what was blamed. People go into, okay, get really excited about how we're going to fix it. And I don't take that for granted. I've had that for a couple of years in my career, and I know I've got it again now, and I know how rare that is. And when you've got that amazing moment when you see people coming together from across teams that just want to problem solve and fix and do it quickly, and there's not ego and pride and backstabbing just slow things down, and we don't have any of those things, and it makes it a lot of fun. Really rewarding.
I mean, the speed that the speed that you can move at when you haven't got to worry about those things, it's amazing. I remember, when I was client side, there was a bit of a cock up, and I had quite sort of like a junior team that I was looking after, and you kind of see like they were like debating on whether or not they should almost like point the finger at each other, and I kind of sort of just said to them, look, it's marketing, no one's died. It's the great thing is that we spend all this money trying to stay front of mind with our audience. All that means is that by tomorrow they're going to forget this mistake. So don't worry about it too much. Just learn from it and move forward.
It goes back to the data point for me. I say this a lot. It's one of my founding principles is that when we're trying something, I don't care if we tried it and we failed. I don't care if we tried it and it went well. Those are both fine outcomes, either or. I prefer it when it goes well. The only outcome which is not acceptable is not knowing what happened. I take knowing that we did something wrong is 100 times better than not knowing if it worked. Almost ruling things out is as valuable.
We've got an instance at the moment where we have, a channel's not quite sticking for a client, and I'm pretty sure it's the conversion pages that the traffic's sort of heading into. And clients quite keen to obviously test out different channels. Google Ads not working for us, and I'm thinking, I've got a feeling that no matter what channel we send this traffic through on, it's going to fall flat. So to a certain extent, I just want to rule out, even if we've got to waste a little bit more money on, Google Ads, let's just make sure that's, the case, because, you don't want to be, 6 months later, someone new starts and goes, I think we should, I've written up some changes to this landing page, implements it, and you think, oh shit, we wasted 6 months worth of budget on that.
Well, the other thing that in our culture, which I love, is that people are just brutally open and honest about it, and not in a rude way, but and I say this with our partners all the time. I say, like, what are we getting wrong? What can we do better? And I think they're always quite shocked that how much we need to learn really quickly, that if we made a mistake, like if I would hate to be in that scenario of one of our agency partners or one of the other teams suspecting it was something, a conversion page, but not feeling comfortable enough to suggest it to me. I would be awful. I always say to our partners and our team the whole time, like, tell us what we can do better, tell us what we're doing wrong. You're not going to offend anyone. We're not a one-oiled machine. We're, stage 2 of growth, really. So, of course, there's nothing that's anywhere near perfect. So you just have to know what's going on.
I have this feeling, I think, that you and I could talk about probably just conversion rates alone for another hour. But I'm conscious we've been nattering away for some time now. So let's jump into our quick fire round. Sam, what other podcasts are you listening to right now or you would recommend to our audience?
I listen to The Nudge, is probably my favourite one. I've gone through a stage of I'm not particularly well read. It's a bit of a weakness, I'm happy to admit. I went through a stage of reading a lot of books, business books, and I had to sort of stop and do some more fun things. I'm doing the same with podcasts, but the one that I still refuse to unsubscribe for is The Nudge, because it's almost behavioural science, which is really what marketing is, and seeing how humans behave. I find that absolutely fascinating. You don't have to be a marketing nerd to enjoy it, because everyone shops. So anyone can enjoy it.
My next question is about books, actually. What's your, what are you currently reading at the moment, or again, what would you recommend?
It's a bit of a cliche, considering the film is out at the moment, but I read Shoe Dog when I lived in Japan, and found that a fascinating read, so I recommend that to people quite a lot. The Choice Factory by Richard Shotton is another one which I find fascinating, which is, again, it's all about the behavioural sciences and how people look at I think there's 27 nudges or cognitive biases that people use, and how you sort of understand why people make choices. I read that a few times. That's a great book, but people always like that recommendation.
What's the best bit of life advice you've ever received?
When I first started out, someone said to me, walk fast. It was in a big open plan office, and when you're quite junior, it was a reflection of people aren't always going to see your work, but they're always going to see your body language. I thought that was quite good advice. And then a couple of years later, I got the no one cares about your career more than you, which was really brutal to hear. But actually, when it was explained to me, you think, yeah, you really need to understand, be self-aware to know where you need to get better and where you need to improve and who you need to learn from. And if you do that, then, generally speaking, I found the conversations in career conversations to be quite positive. And on the flip side, the number one reason why anyone leaves their job is because of their manager. I think that's still factually correct. And some of them, I've learned, a lot of them aren't very good at supporting people through their career. So you really need to take charge of that yourself. Very
well known now that obviously that competence in a role or a skill set doesn't necessarily qualify you to manage people, does it?
No.
Which is unfortunate.
I say qualify. I've been very lucky with my leaders, but when I speak to sort of peers and other people, yeah, I've had some amazing leaders. I've seen how others do it and don't do it.
And my last question, what's one thing that I haven't asked that I perhaps should have asked you?
People always ask, why is it called Marshmallow? And I hate that question because it's not an exciting answer. Don't ask me that one. Don't ask me that one.
Okay, I won't ask you that one then.
I don't know, there must be some sort of what your bugbears in marketing, what winds you up about marketing, I guess. That's always a good question. Get a bit ranty.
Let's go with that one then. What's your biggest pet peeve with marketing? My biggest pet peeve is that people that aren't able to articulate that marketing is just a lever for growth, and people that do marketing for marketing's sake and do campaigns for campaign's sake and do it for awards and do it for... I mean, doing it for PR is, I guess, okay if that's your goal, to get impressions, to get coverage, but I feel really uncomfortable in marketing for marketing's sake, and that's why I work the two main places that I've worked. I really believe that they're trying to, solve problems that others are ignoring. I always think in my head, I can last 5 minutes working for a, massive toothpaste company where is the product really that much different? It's just marketing for marketing's sake. You have to spend money because your product isn't differentiated. So yeah, I guess for me, I have to work somewhere where the product is different or is better or is solving a problem. Sam, thank you very much for coming on today. It's been an absolute pleasure speaking with you. Yeah, it's been a lot of fun. Thank you. Enjoyed it.
The FML podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk. And make sure to search for the FML podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.